Bye, 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 bye.
I know I'm a grifter strong man. You could lick your hand and smack me in the nutsack. Thank God for Tesla my Esla and you strong man.
Welcome back to Strongman Personal Finance. My name is Christopher Felly. I'm a certified CPA accountant. I'm a fake boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. Go buy it, please. And I'm sponsored by SpryTech.com. Check out the pinned comment. Get yourself a pair of delicious, durable cargo pants for any outdoor activity. And you get a 10% coupon code, VTMyET. SpryTech.com. Anyway, ladies and gentlemen, while I'm still a fan of Everything Money, okay? I still love them. I'm best friends with Seth. We're best friends, bro. We talk every night. I think he's a good guy. And I think at least some of them have good intentions. However, this Trader Mo guy is really starting to piss me off. And I even got to the point where I messaged him on Instagram to invite him on, and he refused. I mean, that's his prerogative. That's fine. But we need to talk about this video that they recently made, Everything Money, on their channel about how we beat the market, okay? Because apparently it's really easy to beat the market. So we're going to react to part of this video. And it ain't going to be too long because Strongman needs to go to bed because I got a freaking job, okay? I don't have a highly profitable dog food business to sustain me. So let's go watch this video, and I'm going to give you my thoughts about beating the market. Let's go ahead and watch. Boop, 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 boop. My mouse works.
Market over a 100-year period is about 10%. And I'm going to show you how to beat that with 3 basic, simple strategies. So like I said, 9.9% is your average historical return on the S&P 500 over a 100-year time period. Now, how can you beat that? Well, I can tell you it's not with a financial manager. I can tell you it's not investing in mutual funds. I can tell you it's not investing in these high-cost ETFs, not low-cost ETFs, high-cost ETFs. I'm going to show you what I do to do this. Of course, I have my value strategy. I have a method that I use very similar to the little book that beats the market. And it's basically building my own ETF based on value parameters. And this alone does beat the market over a long period of time. It does a lot better in bad times in the stock market than it does in good times because I'm looking for companies that are of value and have potential to continue to grow based on the current environments of the time. The second one, options. Options is something that I can generate probably an extra 4 to 5% on top of this number that I produce from my value portfolio that can really give me the edge. And this is something that is really starting to pick up in our community. And I'm going to explain to you a little bit more where these options come from. So imagine getting from this value strategy, any 11, 12, 13%, and then adding an additional 4 to 5%. Guys, if you compound that additional 4 to 5% on top of that, that alone is going to absolutely crush anything that you're going to get from a low-cost ETF. And the last.
Okay, first of all, ladies and gentlemen, value. Everybody tries to beat the market, okay? You got fund managers. Their full-time job is to beat the market. And guess what? Over time, they don't. And I don't know if you've noticed this, ladies and gentlemen, but it seems like a lot of parts of the stock market are cyclical, okay? Sometimes growth has its day in the sun. Sometimes value has its day in the sun. You can't freaking time when that's going to work. Is it better to look at stocks fundamentals and have conservative assumptions? Yes, it is, okay? But at the end of the day, I'm a boglehead investor. You know what I do? I buy the entire market. Why does that work, ladies and gentlemen? Well, number one, it's proof in the pudding that most fund managers suck, okay? And you, if you're managing your own portfolio, you're your own fund manager. You're going to underperform. The average retail investor underperforms the freaking market massively. And here he is saying, oh, you can get 11, 12, 13%. You're not going to get that. You're not going to get that buying individual stocks. I can guarantee you. And even if you do for a year or two, when you sell your stocks, you're going to get taxed. And when you get taxed, it reduces your returns. Taxes are huge. Nobody cares about taxes, apparently, but I see them almost every freaking day. Capital gains, freaking dividend income, interest, blah, blah, blah. That's all I see. And I see people get massive tax bills. And guess what that tax bill does? It reduces your freaking returns, okay? So number one, you can pick individual stocks. The freaking professionals can't do it, but somehow you can. I don't mind if you dabble in individual stocks. 5% of my portfolio is in individual stocks for fun. 95% of my portfolio, and maybe I should do another portfolio reveal. Oh, I wonder what it is. Is in freaking VT or some kind of equivalent, because in some places I can't buy VT, like my federal retirement plan. Okay? So he says that, which is complete and utter BS, because even the freaking best fund managers in the world can't do it. And then he says, oh, you can just buy options, bro. Now, he's going to get a little bit more into options, but let me tell you what stock options are, okay? I learned this when I was studying to become a financial advisor. Financial advisor. And I don't have to be a pro at options. I'm not a pro at options. I suck at options. I bought a put against AMC. I lost 100% of my money. It was only a couple $100, but whatever. An option is contract, okay? It's a contract between, you and somebody else. And basically, when you buy an option, if you buy it, you have the right, but not the obligation to exercise the option. If you sell or write an options contract, you can be forced to either buy or sell lots of 100 shares. And for the average investor, if you get exercised and you have to buy 100 shares of something, you better have a lot of freaking cash sitting around. And if you buy 100 shares of any one stock, you're probably massively overweight that stock, because the vast majority of people's portfolios are not big enough to the point where they can buy 100 shares of something and not be massively concentrated in that stock. Trust me, most people don't have a lot of money. And if you're selling options, you're going to get freaking screwed and you're going to be massively concentrated. But let's go ahead and listen a little bit more about his options, bro. And of course, we'll talk about trading too, which is complete and utter garbage and very tax inefficient.
Best way for me is trading. And this is something that a lot of people in the Everything Money community are utilizing. It's trading. And I'm going to just briefly show you my very simple process. And I'm not saying that you're going to get anywhere 40% returns here. I'm sorry, that's not going to happen. I'm looking for something in the 12 to 20% range, probably end up somewhere in the 15 to 16% range year over year. Now, this 40%, if you're looking for 40% on trading, it's not for me. I've always said trading has one of the most negative connotations in the English language because of the way it's used in the media, because of the way it's used on YouTube, et cetera. It just doesn't make sense the way that people talk about it. So let's get into the value strategy. Of course, you know what? Let's say that it's sitting at 170, and let's say that I own Apple shares, okay? Because I want to show you covered calls, and then I want to show you puts. So let's say that you own Apple shares at $170. So there's ways for you to make premium on top of the 170 and below the 170 if you want to add more shares. Now today, let's say that by the end of 2 Fridays from now, so by the 26th, let's say that you want to sell Apple shares at $180, or maybe you don't want to sell them. There's ways that you can do this. You would go sell an option. And guys, we have made so many videos about this. We have about 1,600 videos that we've made on this channel. They range from value to options to trading to different topical conversations. The options ones are really great for you. And I'm going to go a little bit into detail here, but if you want even more detail, you can go and watch different videos on it. Let's say that you want to sell your shares at $180. You're going to go in and you're going to write what's called a covered call. And the reason it's covered is because you own the shares and you're trying to get rid of. So here's the situation. If Apple on Friday, the 26th of August, ends up anywhere above $180.00, anywhere above that, so $180.01 or above, you are going to get your shares of Apple taken away from you at 170. Now, what do you get for that? Well, you get what is called the premium. So when you write this option right here for $180, maybe you're going to get $1.50 per share. So let's say you have 100 shares.
Okay. Oh, covered calls, bro. It's easy money. So basically a covered call is you have 100 shares of something, 100 shares of Apple, and you write a contract where somebody can buy those shares from you at a specific price. Now, here's a problem with covered calls. Let's say you have a stock and it suddenly moons, okay? It goes freaking ballistic. Like think about Tesla. Let's say you had shares of Tesla and it was like $200 and you had a strike price of, $220 on your options contract. And then Tesla moons up to 800 over the next 3 months. Guess what happens? Your contract is going to get exercised and your shares are going to be taken away from you, okay? There's downsides to covered calls. The downside is you can potentially lose your shares. Now, if you want to write one covered call, I'm going to use my trusty dusty calculator here. You have $170 stock, Apple, for example, times 100. $17,000. You need $17,000 invested in Apple to write one contract. One freaking contract, okay? And if you want to make serious option income, you probably need like 20 contracts. Oh, $340,000 in one stock. This options crap is for rich people, okay? If I had 100 million shares of Apple, there's even that many in existence, okay, I could write freaking calls and generate covered call premium income. But if Apple shoots to the moon, which you don't know when that's going to happen, it can happen at any freaking time, your shares are freaking gone, okay? And then he talks about writing put contracts. Now, when you write a put contract, you're obligated to buy. Every contract obligates you to buy 100 shares of stock. So if you write one contract and you better have cash in your account, you have to have cash just sitting there waiting for you to get forced to buy the shares, okay? When you could instead invest that cash in a better opportunity. He probably talks about it. Actually, let's see if he talks about it. But it's freaking ridiculous, okay? These strategies are for freaking rich people. You're not rich. You don't have enough money to play these stupid options games or risk having all your freaking shares taken from you if the stock moves by writing a call, okay? This is so stupid.
Shares of this. You're going to get $150 just to write that option and make that agreement with the market. That is a way for you to collect a little bit more premium on top of selling here. And that actually takes your cost basis for selling this to $181.50 because you collected that little extra bit of premium. Now, if, for example, this thing ends up at on Friday, April 26th, let's say 179.80, keep your shares. You kept your shares and buy more shares of Apple by that same date. Let's say that it's sitting at 170 and you want to buy shares on 8/26 for, let's say $160, okay? You want to own those shares. You're going to write what is called a put. And I typically like to use and suggest that you use cash secured puts, meaning that you have the cash in your account to buy those shares if it hits. So
there it is, ladies and gentlemen, cash secured puts. Oh, I want to buy Apple shares at 160. So let's take 160 times 100. Oh, I need $16,000 just sitting in my account, okay? Do you see the game you're playing here? It's a rich person's game. You're not rich. Even I'm doing okay. I got 6 figs in my retirement accounts. I'm not a millionaire. I don't have freaking $16,000 just sitting there unallocated. So I can write a put and, make a little bit of premium income. Oh my God. And he's saying you're going to get 4 to 5% more from that? No. Okay. You're not going to get 4 to 5%. What's probably going to happen is you're going to get your freaking shares ripped away because you think you're so smart writing covered calls. Oh, but you could do these options and these options. You don't have time for that crap. Go to work, make more money, increase your income, max your tax advantage accounts. Okay. And then, of course, he's going to get into trading. Okay. And he's like, oh, I can make 12 to 20%. You're not going to make 12 to 20%. Okay. You're going to lose all your freaking money trading. You're trying to time short-term fluctuations that you can't freaking predict. Okay. It's starting to get ridiculous. Like they have the potential to be an amazing channel. They really do. They should emphasize you should put the vast majority of your money. They should say this in every video. Put the vast majority of your money in broadly diversified index funds and then allocate 5% for fun. The options thing, it doesn't work for the average person. You don't have the amount of cash to just freaking sit there and write put contracts and hoping somebody buys, exercises those, because it basically limits you to certain stocks that have very low share prices. That's the only put contracts you can afford to write, because maybe you have like $3,000 of cash sitting there. Okay. But you can't do that if you want to buy a great stock that you think is undervalued at a certain price, but the share price is 500 per share. Doesn't mean it's expensive or not. You got to write you got to have a massive amount of money sitting there waiting for you to get exercised. Okay. It's stupid. And I'm not even an options. I don't do options. I think they're stupid. Okay. Besides that put contract where I got wrecked, but they're freaking stupid. All right. Let's go ahead and do some comments. And then Strongman is going to go to bed. Oh my God. There's so many comments. Don't forget to check out my sponsor, ladies and gentlemen, sprytack.com. Get yourself a pair of cargo pants, 10% off 3 items. Coupon code VTMET. That's right, ladies and gentlemen. I can't play the video anymore because apparently the song's copyrighted. Oh, I'm going to take your ad revenue because you played my song for 10 seconds. Fucking loser. Strongman wears cheap hats. This is my German tanker hat. The Reichsmarshal has it on good accord that you are being paid by everything. Yes, I'm being paid by everything money. I wish. I don't have time to do ape stock. It's probably a freaking scam. I was reading a little bit about ape and AMC. Here's some shares. And the company wants to raise money, okay, because they're freaking burning cash. They're scamming you clowns in the retail sector, because most of the companies owned by retail. Like, they know they're fleecing you. They're going to do whatever they got to do to raise cash and dilute shareholders, because they know you guys are dumb enough to fall for it. It's the future, bro. The reaction to A-Father trash talking me, Kevin actually did a decent job of dissecting AMC's financials. Me, Kevin? I got to defend my stepbro. He pays me $2,000 a month. EM are such noobs, not understand the difference in ETF and a mutual fund. There's a difference. I mean, I think they know the difference, you know. But at the end of the day, the options and trading stuff, they need to understand it's not for their audience. Okay, their audience is not like mega wealthy people that have $1 million in cash, and that's like 2% of their portfolio, and they can afford to write put contracts. I mean, if I had $1 million in cash, I'd be like, okay, I'll write some puts against VT, whatever. Oh, I got to buy more VT. Oh. But like, I mean, we're all average Joes. We don't have that much cash just sitting there. Let's see. Strongman sales is 40 million real. I wish I had 40 million in real estate. Let's see. It's Alex. What's up, bro? Strongman doesn't beat the market as much as he beats his wife. I would say the same thing about Stathis, but more. Lady boy. 20% return, bro. He's like Warren Buffett. And yeah, you add up, it was like 11, 12%. And then it was 4 or 5% from writing options, you know, where you have to either be forced to buy or sell 100 shares at a time. And then day trading, bro, 12 to 20%. They're saying that they're beating the market or can beat it. I mean, you can beat the market in 1 year, but try that over 20, 30, 40 years. Good luck. And try beating VT. Bussies. Over 30 years, we'll see. All you talk trash. International's bad because it didn't go up as much. We'll see. Bussy boys. Strongman, how do we follow your stock? Buy my course, bro. Never buy options, but if you're writing them, you can make passive income, even on stock. Well, I explained why. I mean, yeah, you can make premium income, but you're going to be forced to either buy or sell shares, and they're in lots of a 100, okay? Most people don't have that much cash. You know, Tattoo Chef would be easy to like write options against because it's such a cheap stock. Cheap. It's so cheap, but it's trash. 30% annual return on BT camp. I mean, that's true. I don't get 30% returns. Please destroy these clowns. I mean, I still want to give them the benefit of the doubt, okay? I'm not going to, like, throw them to the wind because of, you know, a couple bad things. So they really need to do a course correct. Let's see. The problem is, if I thought Microsoft was a great play or something and sold puts, I would get the shares below fair value, and I get paid to wait until I'm... Yeah, but you have to have cash sitting there, waiting. And, you know, maybe it never drops. And then you missed all that time when you could have bought an index with the cash or bought another opportunity. If you're all in on Tesla, you could do it, but you're right. I have to wait for Tesla to split before I can sell multiple covered call options. Yeah. And just think about what if, if you think Tesla's going to the moon, why would you want your shares ripped away from you? That could happen if you're, you know, writing calls. Let's see. Not to mention Mo fails details like the Greeks, alpha, theta, beta, alpha, beta male, implied volatility, bid-ask spread, and liquidity. I don't know about any of that crap. I just know the very basics of options because I had to study it when I was a financial advisor. It is a rich person's game. Yes, it is. 100%. Imagine if you wanted to buy sell puts on Berkshire Hathaway. Berkshire Hathaway, bro, I got like $30 million sitting here so I can buy 100 shares. A good example, I own 5,000 shares stock. I've been able to write 30, generate a few grand as long as it doesn't skyrocket. I've kept my share. But what if it does skyrocket? You never know with these clown stocks. I mean, that stock, it could freaking moon. And guess what? Your shares are gone. And if you want to buy back in, well, now you're buying it at a higher price. Let's see. Where's Julius Caesar? He made a comment earlier. Strongman, man. Everybody like the freaking video right now. Oh, it's 10:04. I need to go to bed. All right. I did lose 100 shares. See? Had to rebuy them again for less. Yeah, what if it doesn't go down? Then you're screwed. Let's see. Financial advisor. I'm a financial advisor. Buy my policy, bro. It's good for you. Whole life insurance. I usually only do options out of a weaker month so that I can't soar so much. You never know when it's going to soar. All right. Anyway, that's it, guys. I need to go to bed. I have a job because I'm a loser. Don't forget to check out SpryTac.com, my sponsor. Go check them out. Get some cargo pants. 10% off 3 items. Not a bad deal. And y'all have a wonderful, delicious, superstitious, cockalicious night. Cheers!
Holy smokers, folks.
Strong man, personal finance.
Ain't no dang jokers. Alrighty, folks, big video. So in this video, I want to address the last time I was ever bullied in life. Hey there, folks!
You're spending more of our money on those stocks. I'm gonna beat your ass.
Boy, did I get brutalized today.